Hello, my name is Yuya Shimizu, a Chief Investment Officer of Hibiki Path Advisors, an investor investing into Japanese small to mid caps with an engagement/activist angle. In the past, I have started creating presentation videos introducing and explaining some of our engagement efforts to companies such as Kawai Music Manufacturing and TBS Holdings, a broadcaster in Japan. More recently, I have also spoken about our shareholder proposal to a company called Japan Pure Chemical. Today, I would like to shift gear a little bit and introduce our long-term engagement effort to a company called Aoyama Zaisan Networks. We have been invested into this name nearly 3 years, and our relationship with the management has been very constructive, open-minded, and we are very happy with the changes that has happened to the company over the past few years, based on, of course, not just, but with our advice to the company. In this presentation, I have two aims. One is to introduce what kind of friendly engagement we conduct with companies. We are not always completely friendly. We sometimes need to confront the management, but if the company is open-minded and flexible to listen to our ideas, we tend to be quite friendly. The second aim is to actually let the market know the business of this company, because we believe the business model and the value of the business has been misunderstood with the market participants. So, I will dive right into our presentation. Here we go. So before we go into the details of our engagement activities with Aoyama Zaisan Networks, AZN, let me explain a little bit about their stock information, as well as the business they're in. So first of all, about the stock. This company, market cap is around 180 million US. It is definitely a small cap. PE multiple 12 times, price to book multiple 2.9 times. Return on equity this year estimation basis is 24%. And the track record of this company, for example, the book value per share growth over the past 5 years, it has more than doubled. So we believe this is a growth company disguised with value kind of valuation on surface. So what is their business? They are involved in both wealthy individuals and corporates. As you see here in page 6, in Japan, inheritance tax is very high. The highest bracket is 55%. And on an yearly basis, in the past few years, more than 360,000 people paid inheritance tax, which is about 0.3% of the population. And the number is actually increasing due to non-stopping tightening of tax measures in Japan, as well as the aging of Japan population, of course. The second source of their business is with corporates. As I write here, average age of CEO in Japan is now over 60 years old. And frankly speaking, it is said that more than 65% of those companies do not have clear business succession plan yet. So, for example, if something happens to the CEO or the owner of the company will be facing a lot of inheritance tax, which might mean some sort of a tragedy. So, AZN helps optimize those individuals and corporate owners to prepare about those inheritance tax events and to remain a nice assets to their siblings. So they are basically a financial consultant, or we can say they are a family office helping Japanese wealthy individuals and corporate owners. How they explain their business is shown here in page 7. The fact here in Japan is that most of the wealth in Japan is locked into real estate. And this has a long history. In Japan, when inheritance event happens, the tax authority will evaluate various assets of the individual, but real estate pricing is unique that they use something called rosenka, which is a very long-term average of the change in real estate value. And of course, if the asset is in the prime area, for example, in Tokyo or Osaka, rosenka value lags the market value quite substantially, which means it is very low compared to the actual market price. So this will induce people to own more real estate, because when this inheritance thing happens, real estate is the best means to reduce the inheritance tax obligation. So, going into their business history, page 8 is their operating profit history over the past 15 years. So, you can see that in the early days, just around like 5 years after the financial crisis, they have struggled. Prior to the financial crisis, they were owning a lot of real estate on their own balance sheet, and they actually had a very hard hit on their business. So, current CEO, Mr. Hasumi, actually became CEO from 2008 and transformed business. And look at what happened. They started helping the clients without taking real estate risk, and they have been focusing on high added value services to these wealthy individuals, especially using this real estate product called Advantage Club. Based on the service, the profit has grown substantially, and it was only less than 500 million yen in 2011 and 12. Now it is over 3 billion yen estimated for this year, and the company handbook actually estimates it to grow further next year. However, if you look at the stock price, it does not look so steady. Page 9 shows more short-term, like 5 years of both stock price trend as well as the operating profit trend. So its stock price has grown very nicely in 2017, but when the earnings fell in 2019, the stock price also fell. And we all know that COVID-19 has happened during 2020, and stock price actually went sideways for nearly 3 years. We started buying the stock in 2020, and we have had numerous meetings with the board member. But in February 2021, we had our first engagement meeting with the CEO. We talk about the details later, but one of the things we suggested was the stock split, because we immediately understand that the market has sort of misunderstanding the business and not really recognizing the nice follow tailwind from the aging of Japanese population. So after 6 months in August 2021, they listened to us. I believe not just us, but they've decided by themselves to do a stock split. So after this stock split and also the dividend increase announcement, stock price soared and nearly doubled within a few months, which was a very good judgment by the CEO and the board members. However, after this rise in Japan, stock price, especially the small cap stock price, has collapsed after the interest rate started to rise. And although the valuation of Aoyama Zaisan was not excessively high, this company's stock price also fell in line with the market. And while they are estimating a strong earnings growth this year, the stock price hasn't followed. We will come back to what this really means in our view later, but here is our engagement points that we have discussed with the company in the past few years. So in terms of our engagement points, other than the stock split we have mentioned, we have been focusing on advising them to properly express their own business model. For example, we believe they are very similar to a business in the US called a registered investment advisor. So we've done a deep research about the industry in the US, focusing on the company called Focus Financials. How they grew, how they monetized their value, how they consolidated the industry, these strategic aspects especially. So we wrote about 20 pages report and shared it with the management so that they actually understand what they are and they understand what they can appeal to oversee shareholders. Other than that, we have been advising them on how to make their IR materials much better and how to strategically approach their IR activities. So if you look at this page, practical and true disclosure, this is one of the big changes they have made last year. So because their hook is selling real estate product to their clients, in Japan, the accounting method actually includes this real estate transaction. So for example, in year 2022, their standard P&L shows 36 billion yen of revenue. But actually, this includes a lot of real estate value that will come on and come off very quickly through their P&L. So we've been advising them that it is very hard to understand what their real business value is based on this very volatile top line. So they started to come up with this net revenue, which excludes this real estate transaction from both their revenue and cost of goods sold. So now you can see that it is a good business with gross profit margin of around 80% and operating profit margin of around 20% with growing top line. So they just started showing this from previous quarter, third quarter in 2022. So we hope that this will have a positive impact to the recognition of their business value to the market. The next thing, we also mentioned that this Advantage Club revenue is very difficult to digest. Advantage Club is a real estate asset fund that they provide to their clients. And this is actually a hook. So, for example, a client owns a real estate in regional cities in Japan. Aoyama helps them sell this real estate and put the money into this real estate fund, which they manage on behalf of their clients. So, based on what it shows here, it's really a life cycle of running a fund. They acquire real estate, they help on documentation, they operate their assets with management fees, and in the time when they dispose the real estate, they get also the transaction fee. It's basically a nice recurring income cycle, providing service to its customers. The second thing about the expression in their IR material was that they were focusing too much on this Advantage Club product, so people just perceived them as a real estate service company. We thought this is not giving the correct image of what they provide to their clients. So we have been showing various different charts and tables and ideas of how to express their business model. And based on our discussion, the company by itself came up with this explanation with Advantage Club shown on the top. But they do all other sorts of things because Advantage Club is just an interface to get to know a new client. After they become close with the client, they do a lot of consulting, inheritance fund, IFA, family office services, and other stuff. So in our view, this is basically a family office service. High value added consulting service to wealthy families. It is not just real estate. So the company, based on our advice, has been changing the way they express themselves over the past 3-4 years, and we are quite happy with their flexible style. However, unfortunately, we believe we are still on the way. We haven't really achieved a very big difference in market perception. And I want to touch on that going forward. So here, from page 15, I would like to touch on 3 things that we still feel there's some issues. These 3 areas, we believe that company needs to keep working harder, and we will keep helping and advising AZN. First of all, the business actually is being compared frequently by investors to M&A brokerage companies such as Nihon M&A Center and M&A Capital Partners, for example. I guess it is true that they deal with these corporate owners similarly, but we believe that AZN business model is extremely different from those M&A companies. The biggest difference is what are the revenue being created by. M&A companies, most of the revenue is created by the transaction, selling and buying of companies, which is basically a flow type business. AZN actually business is created by, for example, one of the biggest hook is the Advantage Club, making customers buy their real estate product. But this is just the start of the relationship. It is a hook to get to know their clients, understand their clients, and provide much better service to enhance the asset value of the family. So it's more recurring type business which AZN needs to express in a better form. The second point, we believe, the issue is about the inheritance tax problem in Japan, that in 2022, Japan's Supreme Court decided to disallow this Rosenka-based real estate appraisal in the assessment of the inheritance tax calculation. So this is a little bit complicated, and we are not in a position to discuss about the potential tax changes, so we need to be excused from that. But in our view, this judgment I read the details of this judgment myself, but it was very specific in terms of the types of the transaction. Basically, a wealthy individual acquired a prime located real estate just before the inheritance tax event happened with nearly 100% full leverage. And all the parties involved were mentioning in the memo that they are intending to minimize the inheritance tax. So this is very specific deal happened just before inheritance tax event with full leverage intending to minimize the tax payment. This is very different approach from AZN, that they sell their clients this real estate product so that they can manage the cash flow, and if, for example, if inheritance tax event happens later on, the clients have some advantage of recouping the inheritance tax. The aim is totally different. So AZN needs to express this attitude to their business and to their clients much more clearly to the market. The third point is the issue about their main product, Advantage Club. It is not really an issue, but because it is a real estate product, market unfortunately sees them as a real estate service business. It is true and unavoidable that the hook of AZN's business is transforming real estate assets. But this is only because that the wealth of Japanese people are locked into real estate. For example, in the US, a lot of people's wealth is locked into the company or the equity because the economy has grown substantially and the company and the business has grown substantially. So the background of wealth is very different between US and Japan, and AZN is doing real estate because that is the best entry to unlock the value of their clients. So we believe that AZN should appeal more to overseas investors with the better and correct image of being an estate consulting and family office business, since real estate is just an interface to their client base. So we still believe these three things are work in progress. We are also helping the company to better communicate with the market, and we would like to enjoy the growth of the business together with the management, since we believe the stock price is quite cheap in our view. So this is some of the example of our constructive and friendly engagement, helping the company to better express themselves in the market. We are happy to sweat with the management as long as they are open-minded and listen to our suggestions. But if these management are not listening, we are ready to become much bolder. So it depends on the relationship of the management, how we approach the situation. And this was one of the very friendly and constructive relationship that we have in our portfolio. Thank you for listening today, and I look forward to doing this presentation more often in the future. Thank you very much. It was Yuya Shimizu, Chief Investment Officer of Hibiki Path Advisors. See you next time.